Welcome into Blockchain Basement. On today's episode, we're going to talk about the only strategy you need to win in crypto, how to take profits. All this and more on today's Blockchain Basement. Bum, 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 bum. You ready for this? I'm ready. Welcome.
If you're gonna screw me, at least pull my hair.
Hell yeah. What you got?
They could start chopping off fingers. They're like, give me your seed phrase, but I don't know it.
Out to give the numbers out. And I was like, no, hang up the phone right now.
Or like when it dropped in 2020, was it like exciting?
400,000 to 600,000. The generational signals are now
Level. So I don't even know if we're gonna get back below there, but if we do, that's kind of where we
All right, welcome in. We've got an all-star cast here today. Welcome into everybody in the chat. Crypto, Cody 88, Crimson Caravan Company, Bust them up, Smurf, Dave Digital, Crypto with Kai, Mr. Techno Goody, Robert Young, the Deadwood, Corey, Crypto Stevo, Green Day, Profits, all right, Daniel, TJ is my hero. Oh, that's a fun one. I was chatting with TJ's Chicken Salad last night on Twitter. Sand Diesel, Teresa Young, Skid Marks, Dave Digital, all of the OG members. Welcome to OG status. We really appreciate you guys. I did see yesterday we had some more signups for the memberships, as well as some more of those NFTs minted. Those will end at 15K subscribers. So if you want that OG NFT, sub 15K NFT, you have to mint it before we hit 15,000 subscribers. You do have to be a YouTube member to get access to that. So join memberships, and then you'll see in the member only post how to go through and get that through the Discord. So your time's running out there if you want to get that. But real quick, like I said, the All-Star cast. We've got two from the Mafia today. So everybody better be on their best behavior. We got the one and only Frankie Candles, Tony D. What's my favorite thing to say every morning when I walk into the office. And the Druth, as always, keeping us focused on what really matters and not too comfortable, that's for sure. So, and Owen on the board. We don't know if the mic's working or not. Or I don't know.
It is. We figured it out.
Yeah?
I saw it.
Yeah, it's working.
All right, Owen. We got him back. So.
It was totally, just a system anomaly. The electric things break, believe it or not.
That does happen.
It happens.
TJ, I want to say that TJ does love saying that every morning. And the other day, he walked in and lagged. And I heard from down the hall, like a minute after he walked by, Tony D.
Yeah.
And he was like, I forgot to say it when I walked by.
So I walk by Tony's office every morning. So and he's usually here before I am. What time do you get here? Like 7:30? 8?
No, like 8:39.
Yeah. So usually I get here around 8:30. So we're usually here generally around the same time, and he's usually in there. So I'll say that to him. Well, welcome, Crypto with Kai. Welcome to OG status. Thank you. So yeah, like my first day back, I walked by and it didn't click until about 30 seconds later. I was already sitting at my desk. I was like, I never said hey to Tony, and then like you said, I said it. So.
Did you say it from your seat?
I said it from
your desk.
Yeah, I just yelled it all the way. I heard it from back down.
Oh, I love that.
Yeah, I just yelled it down the hall. So, all right. Well, checking back in, I'm going to have Frank do some TA and share a little bit about what he thought happened yesterday. We were talking, I think we're going to see some pullback over the next 6 months or so. It was interesting to see that pump. And then, today we're sitting right where we left it, basically right at 29,149, according to Crypto Market Cap. So, down 0.5% on Bitcoin, literally, flat on Ethereum, like just not a lot of movement in the top 5 coins. I mean, really at all. So, Frank, real quick, do a little TA for us. And then I want to come back, talk about the curve stuff. Then we'll go from there.
Absolutely.
New shirt matches the chart.
Yeah, look at that.
Yeah. Oh, yeah. Check out the Frankie Candles University shirt on Hit Merch. This one is a size too big for me, though. I will say that. If you guys saw the morning show,
FrankieCandles.com.
Well, FrankieCandles.com is the Hit Merch site. It's on both, right?
It's on both.
Okay.
Real quick though, before you get going, smash the likes, guys, if you love it when Frank is on the basement. I love having such a esteemed guest like Frankie Candles. He's a busy man.
I appreciate that, and I love coming on here. I always say this is like especially the community. Like the community is just, I love it. The
One
jokes,
of a kind.
the chicken salad jokes, the mug jokes.
Yeah.
You guys
Basement dwellers are unique.
Yeah, for sure. Also, real quick before I start this, I do just want to say I see you guys making the inhaler comments. I don't have an inhaler. I don't know what you guys are talking about. Anyway, I used an inhaler one time, and that's it. It's my personality now. But anyway, taking a look here, guys. Obviously, we did get a push to the downside. I'm actually pretty happy with the way this played out because yesterday on the BitBoy Crypto Show, we were talking about how I was in a long from down here, looking to come up to this purple box between about 29.8 and about 29.650. And we were down here on that morning show, and Ben was also in a long. And he didn't say this, but it sounded like he was saying, I think our level had something to do with the trade that he got into. He didn't mention that, but it sounded like that. And it wound up playing out beautifully. It came right to our purple box, which was not only where we were looking for, looking to take profits, but also looking to get into a short position, which is now, played out, almost hit the final TP here. Just missed it by a few bucks, but it is doing really well right now. So, it's just like, this is why I love being a trader, because it's like you can make money on this big move up and then just roll it back around and make money on the way back down. And that's literally like the motto of, trading in general, is make money whether the price goes up or down. As where I stand kind of in the more macro, let me pull up a little bit of a cleaner chart without as many levels. And I do just kind of want to talk about, actually, you know what I'll do? I'll just actually hide all this TA just to clean things up. Make it a little bit easier to digest, and then I'll just get rid of this, and this. So kind of what I'm looking at here, guys, is on the 4-hour time frame. Even if we zoom out a little bit more, and again, locally on the morning show earlier today, I was talking about potentially getting a move down to the value area low, which we did wind up coming down. We dipped a little bit. We were looking at the 786 down here for a potential bounce. I mean, we literally just did this a few minutes ago. It happened pretty quickly. And we did. We shot for that golden pocket, pushed down towards that 786, and now we are starting to get a little bit of a rebound. It doesn't always happen that clearly and that quickly after.
That's like to the line.
I mean, I will say, like, this does happen often. It's not, it doesn't always like, hey guys, I think we're going down this level, and then it comes down that quickly every time. But yeah, looking for support at that value area low, and like this really is credit to the volume profiles, right? Like we knew as soon as we broke this value area high that it was likely that we'd eventually make it back down to the low. Obviously, getting a little bit of turbulence on that POC. So locally, I will say, 4-hour red dot is confirmed. Our 6, our 8, and our 10 and 12 hour time frames are looking to cool off. 8-hour red dot printing as we speak. So my sentiment remains the same as the morning show, as I do think we could continue down a little bit here. And if we zoom out, guys, this is going to kind of put things into perspective. And oh God, this is... Yeah, so this was a level that we were looking at on my live stream the past few days, saying, if you zoom out without looking at every little support level, resistance level, just kind of looking at a clean chart here, you can look at the macro volume profile. And this is kind of what gives me kind of our overall sentiment, or kind of my overall thoughts on the market in the longer term. I don't know why I can't select this volume profile to delete it. I just want to... Come on, there we go. So if we look at this macro volume profile, so I pulled this range all the way back from this. Actually, what I like to pull this to is the 17th. So this range here is just a macro volume profile, right? When you reject the high, you're expecting to come to the low. When you deviate from the low, you're expecting to come back into the range and come to the high. And we have lost the value area high once again. So, once we broke this level, that's where I start to think, hey, we might be starting our journey, because we know once we lose that value area high, it is more likely than not that price will get sucked towards that POC, which is coming in at about $28,050, right? And we were even looking for a potential bearish retest of the value area high, which we did wind up getting almost to the dollar here before that rejection. Literally, like... I'm going to wind up getting a volume profile tattoo, guys. I swear. I'm not even lying. Like this thing.
If that's your first tattoo, that'd be so funny.
It'd be hilarious, right? It'd be like the nerdiest thing ever. But they really are like impossibly reliable. So really, long story short here, guys, as long as we remain below this value area high, I am going to expect price to get sucked towards this POC at $28,050. We also have a pretty interesting fib level that is in pretty decent confluence with that point of control. You can see that right here. I do like to draw my support and resistance as zones. So this is a pretty decent bit of confluence here. If we do get down there to get some kind of a bounce, which we kind of already did almost come down and touch it.
28K, like you said, for the volume reasons, is going to be a very strong level, just because we've seen so much Bitcoin trade hands at that price, on the way up and on the way down, both times.
Yeah, absolutely. And that's what makes these levels so strong. Exactly. So that's kind of what I'm looking for. I mean, and then once we lose that POC, if we wind up losing it, we can't get back above it. We know that we can look down towards that value area low, coming in at like 26.3. And, I don't want to start talking about like super low targets, but, because we're kind of far away from those.
Well, that was where I was going to go. So I'm glad you're going there.
Yeah, for sure. Because I know you were mentioning this before, TJ, and I know a lot of people are probably curious. Really, my line in the sand for this macro uptrend to, stop. I do think at this point we can continue to see this uptrend continue. However, once we come down to this value area low and we start decisively breaking this previous low at around $25,000, we start closing daily candles below this level. That is kind of where I am going to be expecting lower prices for Bitcoin. So again, like even if we come down to this value area low at like 26.3, I'm still looking for a long position here, just due to the nature of the support of the value area low. But once we get below that level, if you can't get back above here and we lose that 25K level decisively, that's where I'm looking lower for Bitcoin. I do think at that point, this giant uptrend on the weekly will wind up flipping the market structure on the higher time frames, and we could wind up coming down pretty low. Real big key level I would watch, is between, I would say 20. I would even say maybe 22K. Maybe 21.5 all the way down to about 20K is going to be really, really, really important levels to watch.
I'd round them. I'd say 25, 22, and 20.
Yeah, absolutely. I would agree with that. And then one last thing, I will pull this macro golden pocket, and I did not mean for this to line up, but our macro golden pocket for this entire move to the upside from the bottom of the bear market to this previous high at 31,850. That golden pocket does come in at that between 21.7 and 21.115, say. So that would be a decent place to start looking for some support if things start to get really ugly. And then that 786 does get closer to about 18.9, which I'm not calling for that. But, once we lose these lows, those are the levels we're going to have to start looking down to for sure.
That's when the true bears come back and they start calling for 3K again, and 12K again, and 10K again.
It's so exciting.
Yeah. No, but that's right in line with what I was saying. It's always interesting. That's just gut. And a lot of times, like what Frankie was saying with the volume profile, you can see maybe, I mean, you definitely can see this on the chart. A lot of times I don't use the chart. I just remember. Like, I remember in 2020 when there was a big pump and we broke the previous all-time high of 20K before, and it went from 20K to 28K real quick.
Yeah.
And then it hung out at 28K, pumped up, pulled back to 28K, pumped up again before we started getting into the 50, 30s, 40s, 50s, 60s. And then same thing on the way back down on the fall from 69K. I mean, there was clear, we know 40K, there was 39, 40K, tons of Bitcoin traded hands at that level. Obviously at the all-time high, but then again, on the way back down, 30K and 28K again, extremely high amounts of volume. 20K, extreme, 25K, tons of volume. 22K, tons of volume. 20, then obviously all the way down to 17 where it bottomed, or has for now at least. So, if you use those just very broad general macro supports, I think that's a great way to just kind of look for longs, look for shorts, and again, it's a double-edged sword because once they break and your theory gets invalidated, it can, cause you to kind of mentally spiral a little bit. Like, I don't think, if you decide okay, I don't think it's going to go under 20, and then it does. And you're looking at, okay, well, now do I believe in this at 17 or am I scared to buy at 17? Which is what happens a lot of times. You get down at those life-changing levels that you said, man, if price ever got to 17K again, I would mortgage my house. I would put every dollar I have into it. People say that all the time. And then the price gets down there and the whole scenario, the macro, the environment is so scary that people don't do it. They're like, well, yeah, I said that 9 months ago, but that was before the US did this or the banks did that or whatever. So
yeah, I think this bear market was like a perfect example of that, right?
It was,
it's like,
yeah.
I would buy, Bitcoin at 15K, 10K all day long. And then it's like, yeah, well, the exchanges are going down now though. So like, I'm not going to buy this.
Yeah,
like,
exactly.
Come on.
Yeah. Well, I mean, what if they ban it in the US? And it's like, well, yeah, that's why the price is down right now. You know that, right? Like, what if they don't? Then the price goes back up. That's why you buy.
Right. I know it feels so backwards when I'm like watching this potential downside for Bitcoin, and I'm like so excited.
Right. It feels so wrong
because I just can't imagine like the different entry points that'd be on altcoins right now, like good altcoins that we see that are really relevant. They could be cut in half by a move down to that level.
Yep, very quickly. So, I see a couple things in the chat. Dave Digital, while Frank was doing the TA, says Frank just seems like such a nice kid, and he really is. Frank is a really good guy. We've been watching. Allie and I have been watching Freaks and Geeks a lot. I don't know if you can turn that screensaver off but I don't. It's a great old show. I'd never heard of it. It was from like the early 2000s or whatever. It was like the beginning of Seth Rogen and James Franco and Jason Segel. Like they're all in it. It's pretty. And there was only made one season of it, but you remind me a little bit. There's a character Sam Weir. He's just like the regular everyday kid at school, and it kind of I could totally see that being you, Frank. Just a super nice.
I don't watch the show now.
No, yeah, you definitely should. He's a nice, smart, just like a regular kid in school.
You talk really fast though.
Yeah,
you do.
He talks or I talk really fast.
You talk.
Oh yeah,
it's because he thinks fast.
Yeah, I think it's a New York thing, maybe. I don't know. Yeah, I do talk super fast.
So what's up? What's up, Tony?
Oh no! To those who don't know, Frank did debut in a movie when he was a wee little boy.
Really?
I was technically in a movie with Peter Dinklage. Yeah.
No way.
I met him, and it was before he was like super famous.
What?
But yeah, I was probably 10 years old. We actually. I don't know if I want to say the name of the movie, but
yeah, you do.
It was a movie called The Little Fugitive. It's actually kind of hard to find. It was
if anyone needs help finding it, I got the timestamp.
It's
on Amazon Prime Video.
Tony's got the VHS. What are you talking about?
But yeah, Peter Dink. I didn't know he was in the movie until I met him. I remember talking to him or whatever. I was young. I was probably like 10 maybe, and I was in college, and I had my DVD collection sitting there. And one of my friends from college was like, looking at my DVDs, and he's reading the back, and he goes, "This is the movie you were in, right?" And I was like, "Yeah." And he goes, Peter Dinklage is in this. What? And I was like, and I didn't know who he was at the time. He's like, this guy from Game of Thrones. I was like, no way. And I looked at him. I was like, yeah, that's him. I met him.
What was the name of this again? I'm looking it up.
It's called the Little Fugitive.
The Little Fugitive.
Yeah, and it was. I think it's a remake. I'm in the movie for probably 0.7 seconds.
Like 4 seconds.
My line was me nodding my head. Yes, that was my line. So
didn't they rug you from like
it was in
liberal?
2006?
Yeah,
I think I found it.
Oh no!
Dude.
Hold on. I mean,
I think it's an hour and 28 minutes in.
Oh, how do you remember
I'm not gonna be able to pull it actually up. But is this?
Oh yeah,
movie?
that's it. That's
Oh,
it.
my
Little
Lordy.
Fugitive.
Yeah.
Wow.
This is Frank pulling off the Hustler right here. No,
Yeah.
all right, there you go. There you go. You learned something new about Frank. I didn't even know that. So, all right. So let's pull this back to, what we're here to talk about. Crypto. Oh, Dave Digital, little fugitive. You know how long I've waited?
We've pulled it. We've mentioned it so many times on stream, but Frank has never leaked the name of it.
Yeah, well, there it is.
And there it is.
Eric Carlson. He says, "I'm late. What up, Basement Dwellers? What up, man? Welcome in." And Punk Rocker, you did jump in at the right time. So okay,
Yes.
I talked about Curve a little bit Monday. I meant to get back to it some Tuesday. The base stuff, I'm not going to come. The story, and I realized yesterday after the show, like, hey, we had a really good conversation. I didn't mention half the stuff that I said I was going to. So base rumors that SBF rugged that. Maybe it's true, maybe it's not. A lot of evidence linking to at least somebody very high up at Alameda, signers that were involved in transactions for Serum and a lot of other things that Alameda and Sam were involved in. So if it wasn't Sam, it was definitely one of his cronies. But what do you think, Drew? Do you think he was actually Sam?
Oh, I don't think it was actually Sam. I think it was just some of the leftover
Same playbook.
Yeah, like people left behind in the network, in the overall Alameda, SBF, FTX network. I think there's a lot more that goes into that framework. I think those people are still out there being bad actors, and they just haven't been discovered yet. And I'm super aggravated that we as a country don't care about our elections being paid for by our own money being stolen from us.
Yeah,
so
there you go.
That's
so
pretty tough.
Same group of people, serial ruggers out there creating, using the free market basically as it works to get their own advantage, whether you like it or not, whether you think it's moral or not. That's up to you to decide. But it doesn't feel great. I can tell you that much. I'm sure a lot of people are upset about it.
It stinks.
That brings us to Curve, which to me is a little bit more of an interesting scenario to talk about. I don't know. Have you guys been keeping up with that situation at all? What was happening with Curve and the hack and all that stuff? A little bit?
Yeah, well, I've been keeping a close look at the chart. We were looking at it yesterday, and I was talking about, because I actually, maybe you guys can kind of fill me in more on the hack, on like the severity of it. Is it like a project ruining thing? It didn't seem like it on the chart. It looked like we were finding a nice bottom.
Well, and so that's what I wanted to get into today. We got a little bit of a Terra Luna-esque type scenario going on here with leveraged Curve. And this is... it's funny. So Chainlink God here says this is a great... defines it well. It says nothing encapsulates DeFi better than a founder depositing 50% of his token circulating supply into various lending markets to fund the purchase of a mansion, then letting that position pose such a systemic risk to the solvency of the ecosystem that those who have a vested interest in not seeing DeFi collapse then bail him out. Welcome to the future of finance, which is like, so for, long story short, if you guys have, you guys have been around for a little while, you know what happened with Terra Luna, with the stablecoin crashing, and basically it created a race to the bottom for Terra, which caused Three Arrows Capital and Celsius and all of this leveraged, loaned out crypto to go bust because it was all based on certain prices. Similar, exact same thing that happened with the FTT. FTT was loaned out with a certain value price, where if it went below that, the loan gets liquidated, so then they become incentivized to hold it up. So long story short, that happens all over crypto all the time. That's literally the way the traditional finance system is built, where if people started calling their loans, it would fall apart really fast, or if somebody gets upside down too much, gets in too much debt, all of a sudden there's not enough money to go around, and you see all these banks going under. We see it happen often with governments and banks. It's part of running Ponzi-nomics. Now in DeFi, what happens is they actually get liquidated and people feel that pain. The market corrects and you feel it. That's why we just went through what we just went through in crypto. What in traditional markets, they just print more money and try to pretend it doesn't happen, and it just slowly gets extracted from the lowest citizens, which is, unfortunate. So, this Autism Capital breaks it down here pretty good. I'll read through this so you guys can kind of get your heads around it. But so this is the mansion that gets purchased. It's not too bad. So Curve hack liquidations, DeFi contagion spiral, dropping the soap, Curve edition. So several months ago, the Russian founder of Curve, Michael Egorov, took out $100 million loan on Aave to purchase ultra tasteful house in Australia. He used $280 million of Curve at the time, or $280 million worth of Curve at the time as collateral for this loan. Unfortunately for Michael, Curve was hacked 2 days ago. The hacker made off with millions of dollars. Bad, right? This was just the beginning of Michael's troubles. I guess that's him. Cool looking dude.
Yeah.
The hacker has about 7 million curve in his wallet, which by itself wouldn't be a problem. There's enough liquidity in the markets to handle a 7 million curve market sale. The real problem is that everybody knows Michael's in trouble, and this is creating a reflexive feedback loop of dumping as people stop hunt Michael's curve position. So basically, this is similar to what happened with, like I was saying, with FTT. People knew the liquidation point of these positions, so they know if I can push FTT down enough, it forces this liquidation, which then just wrecks the rest of the project if it's 50% of the supply or anything like that. So Curve is currently dumping and is getting text messages from Gary Gensler. Stop hunting isn't the only issue, though. As Delphi Digital pointed out, the APY on Michael's position is doubling every 12 hours. This means that he'll be liquidated in a few days if nothing changes, and 59 million curve will be dumped on chain. This isn't nearly enough liquidity to handle a there isn't nearly enough liquidity to handle a $59 million market dump, but this would still be just the beginning of the fun. If Michael gets liquidated, all of his other debt positions will be liquidated too. This likely means Inverse Finance and Magic Internet Money will both die due to the new bad debt, and Aave will get stuck with 63 million of bad debt. So again, this is very similar to Three Arrows Capital goes under, Celsius is stuck with bad debt, which makes Voyager go under, and FTX goes under. And when all these things went under that all owed each other all this money, now, you know, the bad debt just gets transferred from entity to entity to entity, just taking all of them out until eventually it lands somewhere where it gets absorbed. This means they'll have to sell 63 million of Aave on the open market to pay it off. Fortunately, Aave's safety fund is currently around 330 million, which is more than enough to pay off the bad debt even with market slippage. Michael's position can be viewed here. Last 12 hours alone, he's lost 50 million due to the declining price. His liquidation prices for Curve are approximately 38 to 40%. Last I checked, yeah. See, we're sitting at 58%. It seems, so not to freak everybody out of Curve too bad, like it seems to somewhat have stabilized here. It has a hard, like this was the initial drop. This was people trying to push it back down. This is, I'm sure, him trying to push it back up. You know, like I'm sure there's, these people have ways to manipulate and impact these price movements. So, but you can see it's on its way back down right now, and it becomes now a mission. You know, if people are incentivized enough, they know all I have to do is get this thing from 58 down to 30, you know, basically, or 38.
38, yeah.
So as of the, you know, and this tweet was written, I think, a few hours or 12 hours ago last night, something like that. As the time of this tweet, Curve is currently trading around 50 cents. A week ago, it was 72. In one sense, and again, this is kind of what I was getting at. In one sense, this is proof that DeFi works as intended. There are no special rules or bailouts, no matter who you are. So even though creator of the project, he's not able to, you know, move some monies around at the bank or get a special permission to, you know, break the rules this one time. It's a brutal free market governed by math and code. In another sense, it's a black eye for the industry at exactly the wrong time and could easily set us back by months/years as skeptical boomers who were thinking of dropping their or dipping their toes back into the DeFi waters get scared off by its Wild West nature.
My God.
So now that we're done with that, that kind of catches you guys up on the whole Curve situation. So that kind of puts it in a little bit of a different light, and on would you buy it, would you not buy it? You know, is 50 cents look like support, not support? You know, does that change you guys' perspective on it at all?
Yeah, I'd be a little bit more that, because that's the thing. Like, I was looking at the chart last night, I think, and it did look like it was getting a nice bottom. Which I haven't looked at the chart today. Maybe it got a bounce. It doesn't look like it got anything significant. But yeah, you know, I was telling people last night, like, listen, the chart looks good, but like this is a situation where you kind of need to know a lot more about the story, right? And that does make me probably a little more iffy about it. To buy it and hold it long term, probably.
Mm-hmm. Well, it creates an interesting dynamic with DeFi, right? Like this is the direction we want things to go, because it kind of got me thinking about somebody. Where did it go? C90 FTW says Curve seems as stable as Amanda Bynes. That one got me. That made me laugh. And that is true with a lot of DeFi. It's volatile. It's experimental. That's the other thing we need to keep in mind. Like Terra was cool. It was great. You know, an algorithmic stablecoin until it wasn't, and then it all comes crashing down. Curve, it could be a similar scenario. But it is progress, in my opinion. We are moving in the right direction, but it shows there's a long way to go. And it kind of got me thinking about, okay, look at how great the protocol and the technology and the design can be, and how the and how one abuser of that network now had the ability to take the whole thing down.
Right.
You know, that's and then you start thinking about like, okay, what's going to happen when the VCs, when the BlackRocks, when the guys that are running Goldman Sachs and banks and all that sort of stuff are involved in DeFi? Are they going to still figure out ways to on-chain rig the system in their favor? You know, that's what I don't know. It makes me start thinking about that kind of stuff.
Is it built into our human nature?
Exactly. Is the future of finance a better future?
Right. Well, and it's like, can we break the past of the idea of it? Someone took what was in my head.
Yeah.
This is the crypto human centipede right here, where you're just ingesting leveraged loans and then passing them on down the line to the next sorry sucker that's behind you.
Right.
And it resets every, I think 100 or 200 years in any civilization. It never works out long term. We have a chance with new technology. Now we have, a way for a proof of work to happen out of a computer system, and with that proof of stake and all these different things that we design. But is there that just consistent underlying human factor that's holding it back from actual decentralization because of that internal greed? We just seem to always run into with people at the top. It just happens. It's hard to think about. That's why, people ask me why I'm not super bullish on some proof of stake projects or something. There's a reason that I always lean to is the founder black baggable, meaning are they able to be wrecked by any massive financial organizations that can constrain them and basically shut off their monetary abilities through these means of stop hunting or shutting down their bank accounts, things like that. But if they're black baggable, then, the system that's in power right now, when you ask that question, is BlackRock going to do it better? Look what they've been doing for the, you know what I mean? Like what was, there was all kinds of military contracting firms that made a killing overseas for the last 25 years. Yeah. Right. There was a lot of pain that the country went through and a lot of spending, and they just kept plowing forward. So it does concern me. I know the number will go up, but they might recreate the same garbage system that we have now if we're not outspoken about it.
Yeah, I mean, that's what Mr. Techno Goody just said right there. He said, simple answer, yes. TradFi will continue the same techniques with crypto. It's their modus operandum. And kind of like what Drew was saying, it might be just human nature. It's greed. It's, selfishness, really. It's using technology to gain more for yourself. Which, some people will do, some people won't. And yeah, it'll be fascinating to watch it play out. I mean, this is another good breakdown of it. It says the founder Curve borrowed over 100 million in stable coins on various DeFi lending protocols using his Curve as collateral. So look, he founded a project, he became super rich, and he was looking to cash in on that. There's nothing wrong with that. Probably spent some or all, of that 100 million on IRL, I think real life objects like mansions, cars, things. He converted it into reality, which again, that's what we're about to talk to next, taking profit. And all of you should be doing that. That's the reason we're here. It's appropriate we're talking about it when we've got the king of profit himself, Frankie Candles, on here today. But why would he borrow against his Curve rather than sell it? So okay, if you had $200 million worth of Curve tokens, you're like, all right, I want to cash in on my 50%. Hey, Perennial Madness, welcome to OG status. If you wanted to do that and not sell it, what's your reasoning? Well, maybe you want to avoid tax gains, because if you sell it, you're taking capital gains. If you just get a loan against it, you're not. Right. That's a legitimate reason. Maybe you just didn't want to sell it all on the open market, and people say, oh, you're dumping your project. Oh, the founder doesn't believe in this project anymore. Like that would happen, so then Curve gets hit with an exploit and millions get lost. So now the Curve value is decreasing, and DeFi protocols are raising Curve interest rates at the same time, and the founder not be able to pay down. This is just a simpler explanation of what I just read you guys, but founder may not be able to pay down his Curve loans before they're liquidated. And there are many lessons here, and this is the important one, but and this is what I want you guys to take away from this. The main lesson here is don't use leverage. And then what we've seen when things fall apart quickly and negatively is when you're leveraging, aka taking loans against your underlying assets and trying to use that leverage, and then you get caught with your pants down, whether it was a real estate market, whether it was what happened to Celsius, what happened to Voyager, what happened to FTX, what happened to almost all of what's happening to the banks, Silicon Valley Bank, First Republic Bank. They all got caught using too much leverage. So the less leverage you use, the slower you're going to grow, but the safer you're going to grow. And ironically, that was one to tie this back into what we were talking about yesterday, that was one, the number one piece of advice, I'd say the best thing I've learned from Richard Hart. I should have talked about it yesterday when he was here. One of his favorite phrases is, the best way to get, the only way you're going to get wrecked, or the main 3 way people get wrecked is through ladies, liquor, and leverage.
3 L's.
Yeah, the 3 L's. If you stay away from those, you should be fine. Ironically, I don't know. I can't say what he does in the sense of leverage, but he doesn't stay away from ladies or liquor. So I don't know if he's taking his own advice, but if he doesn't use leverage, maybe he is. But hey, Jay Parks 78, welcome to OG status. Love you, man. So that's the main takeaway that I would tell you guys there is, don't, and we tell you this all the time, don't leverage, don't go get a mortgage on your house to buy crypto. Don't, I got burned with this. We
Celsius.
On Celsius. Ben and, we tried to, we didn't want to at the top, we didn't want to sell all of our crypto. So we're like, hey, we're going to go take a loan against the value of this crypto. And, and the liquidation price was super low. We would have been fine. We had plenty to build into it. Like, it was through literally no fault of our own. We got burned through leverage by the person we used going under. So we put leverage on our Bitcoin. We got cash out loan on the Bitcoin, even though it was only like a 40% loan, 30% loan, meaning we had way more Bitcoin to cover it.
Yeah.
We were under no threat of getting liquidated at all. I think our liquidation point was about 14K, which again, it never even got close to hit. Got kind of close, but we would have been able to add to it to get it down to 10 or 12, no problem. However, Celsius, the lender that we used to do that, they got into too much leverage. They went under and took all of ours, not just what we had leveraged, all of the underlying asset. So without even if you have proper risk management yourself using leverage, you can still get wrecked. And that was a big lesson for me, because I thought for sure, like, yes, this is logical. You have all this, you have all this Bitcoin, the price runs up. Rather than selling it at the top of the market, I knew it was the top of the market. You don't sell it, you go get a loan against it, because it's going to retrace all the way back down. And of course, somebody like Celsius that have been in this industry, they're going to, like, if I can figure that out and use proper risk management, of course, an entity as large, $1 billion enterprise would be using proper risk management. They know if I know the crypto cycles, they know the crypto cycles. Well, that's where I went wrong. Those are some big assumptions. And when you move that responsibility and you don't take it for yourself, bad things can happen.
They were a huge deal at the top of the last bull market. Like, Celsius was all over, like, from a retail perspective, they completely dominated as far as getting their name out there. I felt like it was almost like the first massive experiment with taking loans out against your crypto, though, just from if you're standing far back and you're not in it. But it was just really shown to the public heavily through their
BlockFi.
Right.
But Celsius had huge market share before BlockFi, and BlockFi was trying to catch up. Yeah.
It just because when we hit the peak, I was, another thought came to my mind to use Celsius to take a loan out on my Bitcoin. And then I was slowed down the next day after I was all excited on the day I decided to do it. Then I thought about it some more. And the next day I came to the realization, I was like, I'm going to be taking a loan out at the top of the market. And it's definitely at the top of the market. It'd be better to take a loan out, if anything, at the bottom of the market, so that, you have up to build. But yeah, I felt like it was a big experiment that went really bad, and it might be tied to the original. I think it was it Luna that happened first, and then Celsius?
It was Luna that triggered stuff with FTT, which triggered stuff with FTX, which then that caused everything else.
Yeah.
So maybe it was Celsius. I get them mixed up when Celsius went in. It was. I remember the day it happened. I remember watching it. It was it was the night Bitcoin was falling. But yeah, it was a combination of a lot of different things. I can't remember which one went first.
I think it was Celsius that went first before FTX. But that's just from what I remember. I think it was Luna, Celsius, then FTX. But it was just dominoes, And me and Johnny, 3 months in a row or 4 months in a row, just covering insolvencies and bankruptcies and the world's ending and stuff like that. We're like, really? The world's still ending? You just get kind of over it and really numb to the bad news. But
Red Elephant says, why are your boy holding the pillow so tight? You guys holding him hostage? Yeah, that's actually Tony doesn't want to be here right now. We told him he had to come on the show.
There's somebody off camera threatening me with signs.
I also lured you here.
He's chained to the couch too.
While we're on the topic of risk management, can I shout someone out in chat? Jason Foley was asking if he should put all $200,000 into ADA. I highly, not financial advice, but I don't recommend putting all your eggs in any basket, no matter how good the project is. And even if you were going to do that, I definitely wouldn't recommend doing it all at once. Look into dollar cost averaging, be safe with your money, and do your own research. But
there you go. Real quick, I know I talked to you guys a little bit. I don't know if you've had a chance to mess with them. Those trading, that trading bot niche. Have you guys had a chance, Tony, Frank, to look at those at all, or do you know anything about them? Anybody in your Discord chatting about them? Like Unibot is one of the big ones, and there's all kinds of other different ones.
Yeah, so I looked into them a little bit. I want to do more research into like the actual projects. We took a look at a few of them, but yeah, I think it's really interesting. Like I think like you were saying earlier, TJ, like with that kind of stuff, it's like getting in early can be extremely lucrative, but you kind of have to be careful. But definitely something that, I mean, I was saying before, like I'm probably going to get off this stream and then go do some more research because those are really interesting. I keep seeing them pop up ever since you mentioned them, TJ. I see them popping up more and more.
Nice. All right. Well, I do want to come to the main conversation, or the main topic today. It was in the title, so we definitely need to talk about it. Taking profits. It's a very important thing. It's the only, if you can nail this strategy, it's obviously, if you don't learn to take profits, you're not going to win in crypto. So you're not going to make money in crypto if you never learn to take profits. So many people struggle with it. So many people, we've talked about it before. They watch it go up, they watch it go down, they watch it go up, they watch it go down, but they never turn their time, their energy, their life investment into, real life rewards, whether that's a trip, whether it's, I had a friend, he bought golf clubs, and he was like, he was in it for a long time before he actually like, hey, I pulled a few $1,000s out and, went on this trip, a bunch of new golf clubs. And, it felt really cool that this was like, hey, it's, like actually turn this into something in my real life. Yeah. So we're going to read through some of these and talk through, some of our favorite ways to take profit or strategies, things that have worked for us, because I'm sure it's a little bit different for everybody. But this is from DeFi Minty. Crypto volatile market. It's easy to make mistakes due to emotions, but if you want to succeed, you need to focus on the fundamentals. Here are 5 important lessons to make profit and keep them. How to take profit. If there's one lesson I've learned, is that you can't make any profit unless you sell. And that was basically what I was talking about. So many people I've seen watch and it's interesting. You have different profiles. Like some people, the gambler wants to ride it, versus you. I've noticed, Drew, you're a lot more likely, hey, I've got a 2x, I'm going to take it. And that's kind of what he's talking about here. He said, there are many methods for taking profit, but I personally take my initials at 2 or 3x and take a percentage of the position progressively as the price goes up. So this concept here, this is something I've done in the past. This is something I know my dad, Tim, likes to do. I'm going to bounce it off you guys and see like if this is something you do. So a lot of times what I like to do is make the initial investment, especially if you're talking, hey, if we're talking to degens, basement dwellers, you're going over low cap stuff, or at least mid to low cap stuff. I like to spread it out over a handful of different places, let it run. So if you're talking, maybe get a 2x, 2 or 3x, but generally at least a 2x, then you can get your initial investment back and leave the remainder. You take it say 2-ish X's, you take half out, leave half in. So you've got your original money back and some investment in it, and then ladder out as price goes on. That's how I like to do it. What about you guys? Anything different or?
Yeah. I mean, I'm a big fan of laddering out, and then obviously, I think a lot of people are like a common thing people will do is it really depends on the coin as well. Like if it's a more risky coin, like if I'm invested in like more of a low cap gem type thing, I'm gonna take profits probably a little bit more aggressively, and typically those things move a lot faster as well. So like on a low cap gem, you get like a 4 or 5x. Like maybe I'm just yanking it out and just leaving for good. Maybe leave a little bit of a moon bag. But another strategy, I'm probably gonna go over. I mean, I'll be going over this a lot in the coming months on my channel, like different types of strategies. One strategy that I think is really important to using the Fibonacci extensions, and just to get like realistic type targets where you can't find previous resistance. It allows you to kind of project where that resistance might come in if you can't look left and find previous tops. So looking at like Fibonacci extensions and then having numbers in your head, like once, and by numbers, I don't necessarily mean price. It could be price. I would recommend more like either multiples or percentages, right? Like if I make 300% on this coin, I'm this percent out. If we hit this percent from my original buy-in, I'm this percent out. And just like, that's basically laddering out essentially. But yeah, I'm mostly, I ladder out. I think that's like one of the most success. That's the best way I've found success.
Yeah. Ryan Anderson says holding until 2025. Darren does things. I do 2x on spot, then take it out. then in a bull run, add on the dips. Yeah, I can't. And then Eric Carlson, I don't know if it's sarcastic or not, but he said little old lady strat, catch a 3x and then take out initial investment. Yeah, I guess it's easier said than done, but
you feel like an idiot when you're doing it. You like, you know what I mean? You're like,
oh, this is gonna go up so much.
There's
I'm gonna lose so much money.
You will feel like a moron. Like I sold Ethereum at like $4,500, and I was like, you are the stupidest, stupid idiot in the world.
I think that's huge. I think people need to understand that, because some of the best times I've ever sold, I felt like a moron. I'm like, oh my god, I'm gonna miss out on the gains. I'm gonna miss out on the gains. And like, it's not until like hindsight's 2020, right? You look back and you're like, dang, I sold the top. But at the time, Drew, I think it's one of the most important things to tell people is like at the time, like, I mean, 40, would you say 4,800?
Yeah, but no, 45 is
40,
what I sold.
45, that's
I think it hit 48, but I sold at 45.
Yeah, that's dang near the tippy
pretty
top.
much sold the top.
You sold the top. Yeah, and it must have felt horrible. And
it did.
Yeah,
I felt like a fool.
And speaking of easier said than done, controlling your emotions, I talk to Frank about this all the time, and Frank teaches what I'm about to tell you anyway, but I don't trade actively yet. I have the TA knowledge. I understand how things work, but I don't actually open many positions because I haven't trained my mindset yet, because no one wants to take a little bit of green when they think it could go even greener. And as Frank always says, a green trade is a green trade. Focus on small, consistent wins and risk managing your losses versus huge, more rare wins.
Like jackpot home run trades.
Yeah,
100%.
exactly. And that's like I know how to trade, and I still can't put it into practice like effectively because I know I'm not fully there in my mindset yet. And yeah, I mean, move your stop loss up to the green as soon as possible.
Yeah.
Yeah, somebody said they did that with INJ at 10. I sold INJ at $10 from $275, and I'm feeling that. So it's like you crushed it, and it's even pulled back a little bit now. And then Chemistry Russ said, I'll personally be waiting for on-chain signals and changes in open interest as we cross into late 2025. And I saw a lot of people talking about the time frames, and that's actually the number 2 thing. You guys hear me talk about this a lot. I've shown this chart a lot. Really at the beginning of this channel, we talked about these zones. I told you, the accumulation zone. So really here's understanding the market cycles. I think this is a lot more common now. These days, many more people understand it than they did back in 2018, 2019, even 2017. I know when I was getting into this, I had no idea. I had to learn it the hard way by going through, all of these seasons. But one thing that kills most people is not adapting your strategies based on the market condition. When volatility is high, liquidity flows to the majors like BTC and ETH, while low volatility environments encourage more speculation. I will say all of these cycles do have a little bit of a different twist to them with different things like, stable coins weren't around back then. So like the DeFi wasn't as much of a thing. So now we've seen things flow a little bit more, towards DeFi or NFTs or other as the market matures and there's more options and products out there. We're seeing, that the cycles aren't always the same, but like a lot of people say, they rhyme or whatever. So, but you see, it flows into Bitcoin, then flows into Ethereum, then large cap, alt season basically. And then it kind of does this same thing backwards. The money flows boom, boom, and then boom, boom, and then down. So you guys just loosely, again, we've talked about this a lot. That's a pretty important one. But this is I like the way you described it here. Keeps it pretty simple. The best period for alts usually comes when BTC and ETH are consolidating after a sustained uptrend. People that earn profits from majors feel more confident and tend to greed for the next 10x through alts and small caps. So for example, when we saw, again, that quick move, say from 17 to 20 or, ish for Bitcoin, then it consolidated. We got a little altcoin action. And then, if there was a pullback, those altcoins got knocked out. But then same thing. Hey, we moved from 20 all the way up to 28. Now we're ranging in that, 28 range, and then consolidated there for a little while, got some altcoin action. And then, hey, we moved up from 28 into, 32, 34 or whatever, fell back down to 30, consolidated there for a while. And we'd see those random, the meme coins or, base, or you still have to find those niche narratives in the bottom of a bear market, but it's within those periods of when Bitcoin and Ethereum are ranging sideways. So you want to be when you're getting into those altcoins, you need to be asking yourself, what are Bitcoin and Ethereum doing? Are they ranging or are they, making dramatic moves? Okay, they're ranging. All right, I'm probably in a pretty safe place. Like, hey, what niche is this project that I'm investing in? What does it cover? Is that one of the top narratives, right? What are the top 5 narratives right now? Oh, okay, we know the narratives that are trending right now are perpetual dexes, layer 2s, and trading bots. Okay, this is not one of those things. Oh, it's another layer 0. Okay, do I think another layer 0 is going to start popping off right now, or is that going to be probably closer to next year? And asking yourself, where does it fit within the market cycle? Where does it fit within the narratives? Where does it fit within what Bitcoin is doing? And a lot that what Bitcoin is doing part, for some reason, a lot of people just throw out. I don't know why. They don't tend to put it. I think even when you were, was it you, Frank, that used to trade Ethereum a lot back in the day? And it was like me, you, and Ben were talking about it. And when he was explaining his trading, and he said, look, when I trade alts, like, you can have the perfect setup, it can be doing everything exactly right, and then Bitcoin does something and it completely invalidates all the TAs. So you really, you have to base everything on what Bitcoin's doing, and you can't really, there is standalone setups and things that happen on altcoins, but it's much more difficult because you have to factor in Bitcoin, whereas if you're charting Bitcoin, it's just Bitcoin, which is kind of like saying you got to factor in macro or the dollar or whatever. But
yeah, 100%. I wrecked myself for a long time trying to trade ETH for the simple fact that I figured, hey, I'll get the bigger percentage gain, right? And I'm thinking, like, if Bitcoin moves 1%, ETH's going to move 3 to 4% or whatever, and I'm thinking I can get that bigger gain. And then, I would see a setup on ETH, and Bitcoin would dump, and I'd get wrecked and wrecked and wrecked. And I had to learn that lesson the hard way for sure.
Yeah. And then, so I don't know. Have any thoughts or tips on any of that?
Totally. Like, just in general, like, I started just looking way out. I wanted to build a portfolio that would last a few cycles, right? When I first got into crypto. And then now with the recent crash and all that stuff, I still hold a very old bag. I took like 4 times what I initially put in to crypto at the last top of the bull market. I still have a vast majority of what I originally purchased, though, with that small amount. So now that we had this recent kind of alts, like a breath of meme coin season or altcoin season, I didn't have a problem getting in and then getting fully out, even on a 2 or 3x. And I hit like one that was like a 15x. It was awesome, So I found a happy mistake. But then I have no problem, while Bitcoin is kind of in accumulation zone, with like fully taking profits, because I remember I was thinking that everything was just taking off a lot quicker than it actually did last cycle, and I got a little bit ahead of myself, and those were the coins that actually didn't do well. So turning profits into like family vacation really felt amazing. Right, to like make it real. You know what I mean? Like, make your life better with what you're doing. Like, have goals and understand like what your risk tolerance really is, because everyone's going for a different thing. Everyone has a different amount of money getting into it. So just kind of really being honest with and saying out loud what your goal is will kind of help you. If you follow time frames and get into the right projects, I think that's a good key for success.
Yeah, that was perfect, Ketis. I think that was literally the last one on there. I wasn't even going to touch on it, but oh man, there was a bunch more. Never mind. But yeah, risk tolerance was definitely one of them. Really good summarization, and I agree 100%. That's when I drive my car, it always makes me think like, oh man, I'm glad I took profits.
Right.
Like, no, seriously, like, yeah, it feels really fun. And it reminds me of like, hey, thanks crypto, or like whatever. So
can I say something on that as well? I couldn't agree more, Drew. And I just want to. Crickrat says, 100% Ryan, I don't have time to trade because I deliver for UPS. I literally have 0 time to look at the chart, so I'm holding until the bull run, and we'll start laddering out when the time comes. And that goes back to what's your goal with crypto, right? And I always tell people, I feel like everybody, wants to be a day trader and stuff. And obviously, I love trying to get people to trade. But I think like an important question, kind of similar to what Drew was saying, is like, ask yourself what your goal is, and also ask yourself what your life looks like, right? It's Crickrats is really smart, right? Because a lot of people don't have the self-awareness to be like, hey, I like work full time, like maybe day trading is not for me, and that's totally fine. Like that, like I think a lot of people are just, I don't know, everybody wants to be a day trader, and I always tell people like, listen, if you're at a job for 8 hours, like day trading's probably not going to work out for you, right? Because you're going to wind up getting wrecked on your trades, trying to look on your phone when you're not supposed to be. And in that case, taking a longer term approach, like I think because the day trading has that like get rich quick look to it. Keyword look. It is not the truth at all. It is quite the opposite. So
a lot of work.
Yeah, exactly. It's a lot of work. It's a full-time job, and it does not happen overnight. It happens over multiple years. So taking that less attention demanding approach to DCAing in long term, I think a lot of people who everyone wants to be a day trader, they feel like they're missing out on those crazy gains, and I want people to understand that for me, 90% of my money goes into long-term DCAs. I am trading with a very small portion of my account, right? And it's great. It's extra money, right? But I have the blessing to be able to focus on it full time. So again, on top of saying what is your goal with crypto, what is your schedule and life allow you, what kind of strategy does your life allow you to have? It's also important.
No, that's a really, really important thing. We talked a little bit about it Monday with like using the resource that you have for your advantage. If you have time, use that. If you have extra cash, use that. To your point, Frank, like if you want to long-term invest, short-term invest, a combination, figure out what works for you, then that's really what life's all about in a lot of different ways. There is no right or wrong answer for everybody. It's just about figuring out what works. So real quick, Bearded Buffalo and Elite Crypto, welcome to OG status. We appreciate you guys being on. And do want to wrap up with the last story of the day. This happened, I think saw this last night. Breaking: United States long-term foreign currency debt rating was downgraded to AA+ from AAA. So then I saw this happen.
That's stupid though. Like you go from AAA to AA+. AA+ still sounds good.
Still sounds good, but it not for people that look at this system all the time. Not being AAA for a foreign currency for like it basically saying our currency is not AAA rated anymore.
Yeah,
U.S. dollar.
Why can't they? You downgraded to suspect.
Yeah, downgraded to we got our eye on you.
Yeah.
But we know you're gonna print more, right? Right, you're gonna print some more. So it's not it's another chink in the armor, I guess you could say, for the US, the US dollar. It's just being beaten up and hit all over. We've got this same thing coming out of Zero Hedge. Treasury boosts auction sizes for all nominal note bonds. This is probably in response. US Treasury lifts total refunding auctions by 7 billion to 103 billion. Treasury says more auction size boosts likely needed in the future.
Oh yes.
So here you go. Auction boosts occurring over the next several quarters. The debt train has left the station. So here we go. This is what we're experiencing right now.
No big deal. No big deal. This is fun.
Next stop, $1 trillion in annual interest expense for the United States. So the main reason we were getting downgraded is not due to our production. It's due to the questioning ability to pay the interest costs. Because once we hit 1 trillion in annual interest, now that's approaching, we're approaching more in annual, or I think we've crossed more in annual interest than GDP.
Yes. I think it's at 130% to 100%. So
that's not good.
Yeah. This is absolute like doomer porn, but I mean, it's a big problem that's underlying. And what they're talking about with the interest, like us getting downgraded makes sense because there's a lot of, I've been talking about the regional banks are still at risk for a while, and that bank term funding program is being touted by Reuters this morning that they're going to be using it again to backstop more banks that are going to be at risk of being insolvent or, out of business. And we saw PacWest, nearly go out, but they were absorbed by another bank and no one even cared. No one even cared. Like, it wasn't even a big deal. They're like, oh, yeah, this other huge bank almost just went insolvent, too.
Oh, yeah.
We got a third mechanism. And the Treasury repos they're talking about on increasing from 7 billion to 130 billion. Treasury repos are the second of 3 total mechanisms of financial Ponzi that we have right now. So the next one, if they use the Treasury repos and the bank term funding programs, then the only thing left to do will be to just print another pile of cash.
Exactly. So. Like Eric Carlson says, fiat money is effed in the A. And that's basically, it's to summarize what Drew just said. Yeah, it's effed. Like they're just gonna have to print more and more and more, which creates the interest going up, and it's not.
Let me see the calf cam.
We got a calf cam
Give me the
going.
calf cam.
We got a calf cam
Real
button.
quick.
Let's
Give
see
me the
it.
calf cam.
Let's see it. Oh, look at that. That's for the ladies out there.
Hey,
And
baby.
the dudes, I guess.
Sorry, I had
That's
to
for
do
everybody.
Can I say one last thing about DCA?
You
'Cause
absolutely can.
Robert Young said.
Wait, before you do, if you guys want to hear this nugget of just absolute gem wisdom from one of the wisest minds on this couch right now, then you need to hit that like button.
Yes,
because we got about 360 people in here, only 140 likes. The goal every single day is 420 likes. So if you guys can get to that 420 like goal today, we'd really appreciate it. All you have to do is stop what you're doing, hit that button. If you're on mobile, close the chat, hit it, come right back in. And then you get to hear this.
Before I
glorious.
say that, speaking of 420, Dave Digital, behave. And this is the look of hard work, okay?
Hey, wait, what?
Dave Digital.
Yeah, I know. I'm reading the chat now. What are you guys saying about me over there?
So yeah, Robert Young said long-term DCA is the way. I just want to say, I say this to my friends who don't know anything about crypto and they're skeptics, but if you work at a 9 to 5 and you give X amount of percentage of your paycheck weekly to a 401k or an ETF, I doubt you're sitting there looking at those charts every day, right? To see where that stock is at. It's literally the same thing for crypto. If you believe in crypto long-term, you're most likely going to see better returns on the stock market if you DCA in. So just keep that in mind. People do it with ETFs and stocks all the time.
There you go. That's a good way. That's a good way to put it. So with that lesson, that's all we have time for today. As always, we will see you guys here tomorrow. Stay safe out there. Keep dwelling in the basement. Buy some crypto. Buy some Bitcoin. 420 every day, says Chemistry Bro. Oh, Green Day Profits, Dave Digital, Crimson Caravan Company, Cameron, Earth King, Ryan Anderson, Darren Does Things, Space Manny, Eric Carlson, Crypto Stevo, Ryan Anderson, Manawak, Hallmark, Sin Diesel, Robert Young, maybe's Band-Aid. What's that say? Band-Aid something or other. Eric Carlson, Crypto Kilowall, C90 FTF, Ryan Anderson. We love all you guys. See you next time. We're out of here. Peace.